the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a quick look at how the Singapore stock market closed for the day, the biggest movers, and of course the companies to watch. But as usual, a quick recap of how we started. Well, Singapore shares actually were in the green at the open today as investors globally await key inflation data out of the US, which will set interest rate expectations. So the Straits Times Index rose 0.2% and early trade at 3,795 points after some 68.3 million securities changed hands in the broader market. But as we told you earlier, we saw the STI giving up those early gains to close in the red. So let's take you through the closing numbers. While the STI closed down 0.43% at 3,772 points. In terms of value turnover, we are looking at 1.07 billion Sing dollars. Now, gainers outnumbered losers, though, 241 versus 217. Top advances for today, we've got here Asus, GMHUSD, and Jardine Cycle and Carriage. Top decliners for today, DBS, UOB, and Ascend Bridge. Now, in terms of companies to watch, we do have for you CapitaLand Investment after the real asset manager appointed 3 female leaders into senior roles as part of its ongoing leadership renewal. Now, elsewhere, from how TikTok plans to keep paying U.S. employees ahead of a ban deadline to how U.S. President-elect Donald Trump said he would create a new government agency called the External Revenue Service. More corporate and international headlines remain in focus. And joining me on the line is Jeremy Tan, CEO of Tiger Fund Management. Jeremy, welcome.
Hi, Tian Tian. Thank you for having me.
Great to have you on board. And Jeremy, let's start with the Singapore stock market as usual. How did the STI fare today, and any surprises when it comes down to the biggest movers and also the sectors that they lie in?
Well, if you look at STI today, it's down by about 0.4%. We have seen key sectors that actually detracted from returns were actually the 3 leading banks and also the cyclical companies such as those in the industrial sectors. What we are seeing is that I think there's a lot of volatility in the market as we are actually anticipating the US CPI numbers that will be out tonight, and that will actually set the tone for the overall Federal Reserve's policy in 2025. And even though yesterday we did see the U.S. market eking out a gain on the S&P 500 on better than expected PPI numbers, and also we do think that a lot of volatility there with the inauguration of Trump to office in the next few days. And as a result, we did see a lot of underperformance, especially in the technology sector ahead of the inauguration.
I see. And Jeremy, we'll talk a bit more about U.S. inflation towards the end of the conversation, but let's zoom in on some of the companies to watch on the SGX today. We do have CapitaLand Investment. It has appointed 3 female leaders into senior roles. We also have some news out of SIA Engineering as well, appointing Ng Chi Ken, the Permanent Secretary of the Ministry of Manpower, as Independent Non-Executive Director. I know you don't comment on individual stocks, but generally speaking, how significant are such key appointments to firms on the SGX?
Well, we believe that all these are really part of the normal course of business.
Yeah.
But what we are seeing is that from this is that the SGX initiatives to actually promote really the diversity of senior leaderships and also directorships to actually include diversity in terms of gender, age, experience and skills. I think that will put more diversity on the board and also senior leadership. For the independent director appointment out of SIA Engineering, really also part of the day-to-day operations for directors, independent directors, to actually have a check and balance on company management, actually to also to review perhaps company performance and also set in place certain strategic inputs and help to develop the overall strategy for the company. So we really see that these are, things that are in the course of the normal business.
I see. And from CapitaLand Investment and SIA Engineering, Jeremy, let's set our sights on real estate group Hobbyland. It has launched this non-binding indicative offer to acquire all shares it does not indirectly own in Australian property developer AV Jennings for 70 Aussie cents apiece. And that is higher than an existing offer made by Proprium Capital Partners and Avid Property Group. Speaking in generalities, what is the appeal for property developers to purchase AV Jennings, and could we see more possible bidding wars, so to speak, for property developers this year?
Well, for AV Jennings, actually, it's a leading property developer operating out of Australia. It's actually listed both on the Australian Securities Exchange and also the Singapore Stock Exchange. So this acquisition by CapitaLand is actually a higher offer from the last competing offer. So this would actually amount to a total consideration of about $313 million. So for Hobie, I think that will present itself a very good opportunity to actually enhance its scale and capability within Australia. For what we are seeing is that for CapitaLand, it's more centered around investment properties in its current business. It has quite, I would say, a marginal or lower exposure to Australia. I think what it wants is to perhaps diversify its operations and revenue stream into Australia, and perhaps having this acquisition will allow it that platform to actually enhance its capabilities within Australia and compete with other developers in Australia. So I think every year we do see a little bit of a consolidation in the property development space. There is some specific company-specific privatizations, merger and acquisition opportunities. I think like for the real estate sectors, I think there's a lot more of that opportunities given the valuation that it trades at vis-a-vis the intrinsic value, and also perhaps the strong balance sheet and cash flow and revenue that these companies are actually eyeing to add to their overall balance sheet.
I see. Now let's take a look at what's happening around the world, Jeremy. Big news relating to TikTok. According to an internal memo seen by Reuters yesterday, TikTok plans to keep paying workers in the U.S. even if the Supreme Court in the country does not overturn a law that would force the sale of the app in the U.S. or to ban it. So the question then is, Jeremy, what will happen if the Supreme Court really upholds the law on Sunday? What kind of precedents does it set for the social media industry? What spillover effects can we expect on U.S. social media titans and also China's Xiaohongshu?
Sure. I think if you look at the law that is probably being passed on Sunday, I think it will set really a significant precedence on the social media industry, given that previously this law wasn't enacted. I think there is actually a lot of speculation that it could either come as a form of either a complete ban or either from a sale. So in the worst case scenario, if a ban were to happen, I think that would mean that for the social media platform TikTok, that actually has over 170 million users in the U.S., I think a lot of these users will be left stranded without a place to actually, perhaps, give their freedom of speech. So I would say that, there will be a lot of spillover effects into other social media platforms. I think there will be a lot of migration to other available platforms, such as Meta, X, or even Reddit in the U.S., although they may not be directly complementary in terms of that substitute. However, I think according to Reuters, we are also seeing that there are preliminary talks with a potential sale of TikTok in the U.S. to Elon Musk.
Yeah.
I think that will help to evade impending ban on the platform.
I suppose lots to watch indeed as to what will truly happen on Sunday, because the information reported yesterday that TikTok actually plans to shut off its app for U.S. users, which will be different from what's mandated by the law, I understand, which is to a ban on only new TikTok downloads on Apple or Google app stores. But I suppose lots to watch in the coming days. But further away, Jeremy, let's take a look at Trump. Trump said yesterday that he'll create a new government agency called the External Revenue Service. a little bit like the opposite of Internal Revenue Service, and that is to collect tariffs, duties, and all revenue from foreign sources. This coming on the back of him readying new import tariffs ahead of his inauguration next week. How would you read into the comments given that details are scant at the moment? How does it fit into the bigger picture given the U.S. record deficit that we saw?
Well, for Trump that's going to be inaugurated in the coming week, we are actually seeing that it's coming in at an unfortunate time where basically U.S. government debts is right now at 36 trillion. And U.S. Budget deficit actually in December rising by about 40% year on year.
Wow.
So the elected President Trump will have to perhaps deal with all these issues at hand. In fact, by January 14 or 23rd, according to Janet Yellen, I think U.S. will actually face impending government shutdown because it is coming close to that debt ceiling limit. And as a result, we are seeing that, Trump is reacting to that. Previously, it did ask for Congress to raise or even eliminate the government's borrowing limit to help to tackle this. However, at this current juncture, I think it probably would stick to its rhetoric to increase taxes upon its other trading partners, especially China and other trading partners. And it is also setting up this external revenue service to actually bolster the tax collection to mitigate, the debt ceiling crisis that is currently facing in the U.S. right now.
Okay. And in corporate America for this week, at least before we look ahead, all eyes on the banking sector. JP Morgan Chase, Goldman Sachs, Citigroup, they're among those reporting their latest earnings. What are you expecting this time around?
Well, we are probably continuing to see that the banks, JP Morgan, the large banks, Goldman Sachs, Citigroup, all these banks are actually benefiting from the high interest rate environment that the Federal Reserve has set in place. They are actually benefiting from a really good trajectory of high interest income and also the strong loan growth on the back of the strong U.S. economy. I think already we are seeing that U.S. is actually not faltering into that recessionary scenario, but rather in a soft landing or even a no landing scenario. With that, we have seen markets trading up last year. Yeah, S&P 500 had the performance of in excess of 25%. So we believe that the wealth management sector, trading sectors for these pillars of the banks will continue to do well in 2024 and also extending into 2025 if this positive momentums of markets continue to play through. So we do believe that the banks should report a set of strong earnings with as the earnings season starts in January.
And finally, before we let you go, Jeremy, for today, all eyes are on that U.S. Consumer Price Index for December. I believe economists in a Dow Jones poll, they're expecting the headline figure to have risen by 0.3% on a monthly basis and 2.9% on a yearly basis. What are you expecting on this front? And if it turns out to be true, your expectations, what will the implications then be on the Federal Reserve?
Well, for now, I think the numbers will pretty much come in within expectations tonight. With the CPI, December CPI, we expect it to come up by about 2.9% year on year and 0.3% month on month in November. I think in December, I think that is actually stimulated by the high fuel prices and food prices seasonally. And we do think that, with Trump coming in with his proposed policies of higher trade tariffs, I think all this are seen to be even more inflationary for the U.S. economy for 2025. And that could further complicate the central bank's path of interest rate cuts in 2025. Although last night we did see the PPI numbers coming in a bit below expectations. The PPI actually rose by about 0.2% month on month, which is actually half of that versus the previous month. However, we do think that the overall market is being a bit cautious right now for 2025 in terms of interest rate cuts. What the markets are actually expecting for 2025 is actually only 125 basis points. And even we are actually seeing some economists and analysts actually suggesting that rate hikes could even happen in 2025. But we do not think that is the base case for us right now.
All right, I suppose lots to watch. Thanks so much, Jeremy. That was Jeremy Tan, CEO at Tiger Fund Management. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.